Your income went up, but the stress did not go down. You earn more than you did a few years ago, maybe a lot more, yet the pressure feels the same. The bills still arrive, the account balance still feels tight. Unexpected expenses still create anxiety. You thought making more money would solve this, but it hasn't. Not because you are irresponsible, not because you failed. It hasn't worked because income alone does not change the way money moves through your life. More income does not remove financial stress. It often expands it. When income rises, spending usually rises with it, quietly, gradually. A slightly better apartment, a newer car, more subscriptions, more convenience purchases. None of these decisions feel extreme. Each one feels reasonable on its own, but together they create a new baseline, a new level of required spending. Your life becomes more expensive to maintain. So even though you earn more, your margin does not grow. And margin is what reduces stress. Not income, margin. Margin is the space between what you earn and what you must spend. Without that space, stress remains. This pattern repeats constantly. A person receives a promotion. Their income rises by 20%. Within a year, their monthly expenses rise by almost the same amount. They move into a larger place. They upgrade their car payment. They eat out more often because work feels busier. Nothing irresponsible, just small adjustments that slowly become permanent costs. Another person begins earning well into six figures, but their fixed expenses are high. Mortgage, private school, 2 car payments, travel expectations. Their lifestyle now requires a high income just to stay stable. If income stops for 6 months, everything becomes fragile. Another example. Someone earns a moderate salary but keeps their expenses controlled. Their rent is manageable. They drive a paid-off car. Their recurring bills are limited. They save consistently. Their income is lower than many people around them. But their stress is lower too. Not because they earn more, because their required spending is smaller. Over time, the same pattern appears again and again. Income grows, lifestyle expands, stress stays the same. The solution is not complicated, but it requires deliberate choices. The goal is simple. Create margin. Start with fixed expenses. Fixed expenses create most financial pressure. Housing, transportation, debt payments, insurance. These costs repeat every month whether life is good or difficult. If they grow too large, your income becomes trapped. A smaller home with margin creates more stability than a larger one without it. The same is true for cars and long-term payments. Another step is separating income growth from lifestyle growth. When your income rises, resist the urge to upgrade your life immediately. Let the new income exist for a while. If income rises by 20%, only a small portion of that should change your lifestyle. The rest should increase savings and reduce financial pressure. Over time, this creates breathing room. Next, reduce recurring commitments. Subscriptions, memberships, and monthly services often feel harmless, but each one becomes a permanent expense. Streaming services, software subscriptions, automatic renewals. Review them regularly. Keep only what you actually use. Every removed commitment lowers the income required to maintain your life. Then, build a buffer. Savings reduce daily stress. A few months of expenses in cash changes how financial problems feel. Unexpected repairs, medical costs, temporary income loss. Without savings, every surprise becomes a crisis. With savings, it becomes a manageable problem. Finally, focus on spending quality rather than spending volume. More spending does not automatically improve life. Often it just increases maintenance. More things to pay for. More services to renew. More expectations to maintain. Choose spending that genuinely improves daily life. Reduce spending that exists only because it became normal. Financial stress rarely disappears simply because income rises. It disappears when obligations remain smaller than income. Many people believe the next raise will finally solve everything. But raises only change the situation if spending does not expand with them. Over time, the people who experience the least financial pressure follow a simple pattern. They keep their fixed expenses controlled. They increase savings as income grows. They avoid building lifestyles that require constant high income just to survive. The goal is not to look wealthy. The goal is to remain stable even when life becomes unpredictable. Because the real relief does not come from earning more. It comes from needing less.